The nice thing about an asset, especially gold, that is about to break to all-time highs, there is no overhead resistance up there. So buying something high probably means it's still going to go even higher. A trend is more likely to continue. So in terms of this pattern here, we're looking at a major cycle to the upside, very similar to this right here. This was the last super cycle from 2001, 2002, all the way up to 2011. And we've really just started another one. And all this consolidation is just nothing more than one of these consolidations along the way.
Gold is at a critical point, a crossroad between a massive breakout or a downtrend that could take the precious metal back to the $1,800, $1,850 range. This is the current sentiment of Chris Vermeulen, the chief market strategist at thetechnicaltraders.com. Vermeulen, who has spent the last 25 years as a technical analyst, equities trader and investment strategist, believes the leading precious metal is right in the middle of a big supercycle and properly primed for a massive rally that, in the near term, could take price to the $2,600 range. But that's dependent on whether or not the United States economy is heading for a recession. If that happens, the technical analyst sees the market going into a stage 4 decline, much like the ones experienced during the dot-com bubble burst and the great financial crisis in 2008. According to Vermeulen, who has been warning about a big market sell-off since last year, the equities, bond, and commodities markets need a financial reset, a shakeout that would weed out weak investors or weigh out the impatient ones. The technical analyst believes the coming financial reset will be a great burden for the stock market. Like other popular macro and technical analysts like Lynn Alden and Gareth Soloway, Vermeulen believes the stock market is heading right for a slump that could last for many months. But his predictions for gold and other precious metals are less gloomy. Instead of a huge slump in prices, Vermeulen says a downtrend in gold from its current position near all-time highs will only take it to the $1,800 range or $1,600 range as a worst-case scenario. Another difference is his projected duration for the downtrend. Instead of the many months of a stock market downtrend, Vermeulen predicts that we will get a bottom in gold prices in the second half of the year, and shortly after, prices will start to rip to the upside. But even that is all in the near term. In the long term, Vermeulen is particularly bullish on gold. He predicts that the ongoing rally could last for another 3 to 5 years, regardless of whether a recession hits or not. If it hits, we have a few months of sideways consolidation, then prices rip to the upside. If the recession does not hit, and the yellow metal is able to break the 2089-2090 resistance, then we could be seeing new highs much sooner than anyone expects. Chris Vermeulen recently joined the Investing News channel, where he discussed his short and long-term predictions for gold, what the charts are saying about the precious metal, and whether or not the yellow metal is a good investment in 2023. Please watch the video to the end as we bring you insightful clips from the discussion. Also, ensure you give the video a thumbs up, subscribe to the channel, and turn on post notifications for more important analysis and predictions from the greatest minds in the investment industry. Thanks, and enjoy the video.
Yeah, well, let me share my chart real quick, and I'll kind of give you my high-level view here of what I'm kind of seeing in the gold market. So obviously, this is the daily chart of gold, which you should be able to see there. And I mean, we've had a really good pop in the last 3 days, kind of leading up to the Fed and the Fed wanting to cut rates or slow down rates here. And we're seeing a big pop. Now, the big thing here is if we look at the monthly chart of gold, and this is what I like to look at because we're in the middle of what I think is a very big super cycle that started in 2019 when we broke out of this multi-year kind of basing stage, a stage 1. And this is nothing more than a big bull flag, a big consolidation over the last couple of years since 2020. We're going to go a whole lot higher. This is a rally that could last potentially 3-5 plus years going forward, which is really exciting. The one thing that does stand out that we still need to be aware of is, every time we see one of these big spikes in gold that comes up into this kind of, almost $2,100 level here, it's driven by some type of news event. And of course, we just had, the financial system, the banks start to go bankrupt. And now we've got the Fed talking about potentially slowing rates, and we're starting to see gold pop. So we're up in this lofty level. The breakout zone for gold, which will start to get really exciting for me, is about the $2,089 level. So more or less, if we can break or hold above 2,090 an ounce, especially on a monthly basis, that's the most significant price chart that I like to follow, then we could be off to the races for 2,600, 2,700 gold as the next stop. And that's kind of just based off this big rally here. Using technical analysis, we can gauge based on this bull flag pattern how far up that next target is, which is $2,600, $2,700 an ounce. So I'm really excited about that. The only catch here is that we could be going into a recession. And the last time we went into a recession and we saw stocks collapse, a stage 4 decline, which is a very severe type of sell-off. We've only had a couple of those in the last 20 years. The tech bubble was a stage 4 decline. The 2008 financial crisis was one. And I think we're actually coming back into another type of stage 4 decline. And the reason I say that is because this is the chart of gold we're looking at. And gold pulled back about 34% during that stage 4 decline. Almost all assets get pulled down when there's forced liquidation. So while I'm very bullish on gold and I own a lot of physical metals for the long-term picture, we could still see gold pull back and continue in this kind of this sideways channel over the next year. I think this stage 4 decline could potentially keep precious metals and miners under wraps a little bit here for another 5, 6, 7 months until the stock market maybe works itself out by having some type of financial reset where we get a big crash in equities going forward. So those are the two scenarios. If we can get a close above, 2090 on gold, I'll be on a monthly basis. I'll be really bullish, really excited about the sector. But at this point, we haven't had a close there yet, and we're testing it. But it's a news-based move, and there is potential here for gold to pull back to 1,800 very easily throughout the rest of this year before I think, starts that next major leg. So it doesn't matter which way it goes. We just need to be aware of what it's doing and then follow suit, take action to trade or invest along that picture. But as you were saying earlier, short term, you still have to be bullish. I think it's right in resistance. I think gold might run out of steam here. So while we're bullish on the short-term analysis over the past couple of months, we're right in the nosebleed section where I'm not that excited about gold at this point, just because this is where sellers keep stepping in over the past 2 years. And it's a news-driven move at this point.
From the charts, we can see that gold has had a triple top. According to the technical analyst, double and triple tops are almost always bearish signals. The first top usually takes everyone by surprise. Then it hits resistance and gets rejected. Then the second top comes. When it gets rejected again, short-term traders see that as an opportunity for quick short squeezes. Investors and traders understand that lofty area is a significant resistance, and they prepare to short gold when the top hits again. But there is always the chance that prices could break out above the resistance, which would immediately spark a huge rally to the upside. According to Vermeulen, all gold needs is to hold steady at current levels for a significant amount of time. Then another bullish news could spur the beginning of the next wave of the upside rally. But even if it reverses, the technical analyst is assured that the yellow metal will easily find support around the 1,800–1,850 range. During the discussion with Investing News, Vermeulen noted that he doesn't trade triple tops or other similar patterns that could go either way. Instead, he waits for a break in the pattern and a little time for confirmation that the pattern has broken before jumping in and following the newly established trend. The technical analyst does not believe in shorting at a perceived top that could easily go higher or buying at a perceived bottom when prices go as well drop lower. Vermeulen also answered some questions that have become very popular with investors amidst all the economic uncertainties of the past year. Is gold a good buy in 2023? If you buy now, wouldn't you be buying near all-time highs instead of waiting for prices to go lower? Here is what the technical analyst has to say.
I did a video a little while ago showing, where I accumulated gold and silver over the last few years. So we waited forever after the 2011, 2012 highs. And as you know, when we broke out to the start of this new kind of major bull market, this super cycle, I accumulated all through here. And I even accumulated a little bit right back here on this pullback. And so this is kind of the range that I purchased in. And I have no problems buying something that is running higher. For example, if I was to go back and pull this chart back and look at it from here, people would be like, oh, well, you didn't buy it anywhere near the low. You're buying it now. It's breaking to like multi-year highs. But I have no problems because this buying something high that is trending up, it's typically going to go higher. And the nice thing about an asset, especially gold, that is about to break to all-time highs, there is no overhead resistance up there. So buying something high probably means it's still going to go even higher. A trend is more likely to continue. So in terms of this pattern here, we're looking at a major cycle to the upside, very similar to this right here. This was the last super cycle from 2001, 2002, all the way up to 2011. And we've really just started another one. And all this consolidation is just nothing more than one of these consolidations along the way, right? And it's just a series of pauses, bull flags within the major super cycle to the upside. So, this kind of bucks a trend. You're not supposed to buy high, but if something is trending up, its chart pattern is pointing to, much higher prices, and it has no overhead resistance. I have no problems when it breaks out, jumping in and buying some more physical metals, because I believe it's going to go a whole lot higher. This is just going to be another major leg up in the market. Generally, I don't want to buy at resistance, and I'm not planning to. I'm planning to wait for it to break. So I'm waiting for it to hit all-time highs before I actually even buy gold, which is a little bit different than my typical strategy. I trade physical metals different than like an active investment. So I don't mind paying higher prices, holding out for the long term going forward. So there's nothing wrong with buying high. The key is you have to be doing it for a reason. I have a technical reason. The chart patterns from multiple time frames say it's a very logical, like a high probability of it continuing to rally higher. The problem is people get excited with news like this. They buy it here in the last couple of days thinking, all hell's breaking loose and gold's going to take off. But then gold pulls back for the next 6 months and goes back to 1800. And then they feel like, oh, I just bought the high. So if you buy high on an emotional with no real reasoning behind it, that's not a good thing. And that's where a lot of people struggle with, is they buy it because they feel like they're missing out. They've got the FOMO and they hear all this news and they get sucked up and they see gold moving 1% in a day, which is a pretty big move for gold. And they feel like they're just missing it and it's running without them. That's usually a bad way to get in. I'll pay another 5% higher and get in when a new trend's confirmed than jump in here and then have a losing position for potentially another 4, 5, 8 months where I could put that money to work somewhere else and not have to go through that roller coaster of watching my money disappear and the anger and frustration that comes with buying high just because I was emotional and didn't want to miss out, right?
According to Chris Vermeulen, gold is at a crossroads and prices could go either way. A downtrend to $1,850 with a worst-case scenario of $1,600 if a hard recession hits. However, whether it happens now or in a few months, the technical analyst expects a massive gold rally that would confirm the supercycle and send prices through the roof. Regardless of how it plays out in the next few months, Vermeulen is convinced that gold is definitely a great buy for investors in 2023. What are your thoughts on the video and Chris Vermeulen's interview? Please drop your comments and observations in the comments section below. Subscribe to the channel and turn on post notifications so you never miss any of our subsequent videos on gold, silver, and copper. Thanks for watching.